Stocks slide in the volatile trading session. Stocks are at lows of the day despite solid bank results. Stocks were giving back a chunk of Thursday's massive gains in midday trading Friday. The market was hovering at its lowest levels of the day just around noon. Investors seemed more worried about sagging retail sales and continued inflation worries than excited by decent earnings from financial giants J.P. Morgan Chase, JPM, Wells Fargo, WFC, and Citigroup, C. The supermarket mega-merger of Kroger, KR, and Albertsons, ACI, failed to entice stock shoppers either. The Dow fell more than 300 points or 1%. The S&P 500 was down 1.9%. The Nasdaq Composite slipped 2.5%. Stocks slide on new inflation expectations data. U.S. markets gave up their early morning gains after a new consumer survey from the University of Michigan showed that expectations for elevated inflation were increasing. Investors worried that the survey, closely watched by the Federal Reserve, could mean more painful rate hikes are on the horizon. The Dow fell below 30,000 on the news, and the S&P 500 and Nasdaq also dropped to session lows. The Dow lost 140 points, or 0.5%, on Friday morning. The S&P 500 was down 1.1%, the Nasdaq Composite was 1.4% lower. Citi posts 25% decline in profits. Citigroup reported a 25% drop in year-over-year net income on Friday as the bank increased its loan loss reserves and activity in investment banking slumped. Banking was the business most adversely impacted by the macro environment with reduced deal flows and a lower appetite for M&A, said Citigroup CEO Jane Fraser in the company's statement, adding that the backdrop for wealth management was difficult. Big banks have been slammed this year as the U.S. faces a potential recession, which would lead to major loan losses and an accelerated slowdown in mergers and acquisitions. Out of all the big bank stocks, Citi's shares have tumbled the most, down 32% year-to-date. There were some bright spots in the company's third-quarter report. The bank reported stronger than expected revenue, bringing in $18.51 billion in revenue versus the $18.25 billion expected by analysts, according to Refinitiv, a 6% increase since last year. Personal banking revenue soared 10% year-over-year to $4.33 billion. But the bank reported just $631 million in investment banking revenue for the third quarter, a steep decline of more than 60% year-over-year. Citigroup's Fraser will speak about earnings live at 11 a.m. ET. Big bank stocks rally after earnings, except for anyone who's watched Sesame Street probably knows the classic song about how one object in a group differs from the rest. One of these things is not like the others, one of these things just doesn't belong. Well, Morgan Stanley, MS, was the one that didn't belong Friday. Shares of the investment bank fell 3% in early trading after the bank reported earnings and revenue that missed analysts' forecasts. Meanwhile, shares of J.P. Morgan Chase, JPM, Citigroup, C, Wells Fargo, WFC, and U.S. Bancorp, USB, were all higher after they each reported reasonably solid results. So to quote another Sesame Street song, it's not easy being green if you're Morgan Stanley's stock. U.S. stocks open higher as investors try to keep Thursday's turnaround going. U.S. stocks opened higher in the wake of a massive comeback Thursday that saw the Dow Jones Industrial Average surge 1,500 points from peak to trough and the S&P 500 post its widest trading range since March 2020. Investors also considered mixed third-quarter earnings results from big banks. J.P. Morgan Chase and Wells Fargo stocks soared after they beat revenue expectations. Morgan Stanley and Citigroup, meanwhile, both announced profit misses. The Dow gained 249 points, or 0.8%, on Friday morning. The S&P 500 was up 0.9%. The Nasdaq Composite was 1% higher.